If you've been hearing the buzz about the new overtime deduction, you might be thinking, finally, I'll see more money in my paycheck when I work those extra hours. I hate to break it to you, but that's not how it's going to work. Your take home pay isn't changing, at least not right away. In this video, we'll take a deep dive into the new overtime deduction and cover how it works and what it's going to mean for your paycheck and your taxes. Let's start with the basics. Under the new law, officially called the One Big Beautiful Bill Act, or OBA for short, there's a new federal income tax deduction for certain overtime pay. This deduction is effective as of January 1st, 2025, and it's scheduled to last through December 31st, 2028. The goal is to give some relief to employees who work extra hours by letting them reduce their taxable income for part of their overtime earnings. Now, here's what that actually means. If you qualify, you'll be able to deduct up to $12,500 of your overtime premium pay each year if you file as single, or up to $25,000 if you're married filing jointly. Now, this isn't a tax credit, it's a deduction. So it won't reduce your tax bill dollar for dollar, but it does reduce the amount of your income that's going to be subject to federal income tax. But let's clear up one of the biggest misconceptions out there right now. A lot of people think that because the phrasing no tax on overtime has been used to describe this provision, that means you'll stop seeing federal tax withheld from your overtime pay. And that's not the case. Your employer is still going to withhold federal income tax, Social Security tax, and Medicare tax on your overtime pay, just like before. So don't expect to see a bigger paycheck because of this new deduction. The benefit doesn't show up until you file your tax return and claim the deduction. Then at that point, your taxable income is going to be reduced, which means you'll either owe less in taxes or you'll get a bigger refund. So let's talk about what counts as overtime pay for this deduction. It's not the entire amount of your overtime earnings. It's only that extra premium amount you earned for working overtime. To explain, qualified overtime pays at a rate of time and a half, which is your regular rate of pay plus half of that rate. The overtime deduction applies only to the extra half-time portion of your time and a half pay, not your regular rate. I'll give you an example. Let's say you normally make $20 an hour, and when you work overtime, you would be paid $30 an hour for those extra overtime hours. So in this case, the extra $10 per hour, that's the premium part, and that's what qualifies for the deduction, not the full $30 per hour. So that's really important to understand because a lot of people think that all of their overtime pay is going to qualify, and that's not the case. Now let's look at who qualifies for the deduction. Now the deduction is for employees that are classified as non-exempt under the Fair Labor Standards Act. That generally means hourly workers who are eligible for overtime pay. So if you're an independent contractor, you wouldn't necessarily qualify. If you're a salaried employee in general, you also wouldn't qualify. So this benefit isn't going to be for everyone. It's going to be specifically for certain W-2 employees who actually receive overtime pay under federal law. There are also some income limits. The deduction starts to phase out once your income is above $150,000 for single filers and $300,000 for married couples filing jointly. And once your income reaches $275,000 as a single filer and $550,000 for joint filers, the deduction goes away completely. And here's another important rule. If you're married and you file your taxes separately, you won't be eligible to take the deduction at all. So that's something to keep in mind when you make decisions about your filing status. Now let's talk about timing and reporting. Employers are still going to withhold taxes on your overtime pay. That's not changing. But starting with tax year 2025, they're also going to have to track and report your qualified overtime premium pay separately on your W-2. That's because you'll need that number when you claim the deduction on your tax return. But for this first year, the IRS is allowing employers to use a reasonable method to calculate the amount. But by 2026, we expect to see a more formal reporting method in place. So your pay stub might not change, but your W-2 will eventually show this detail. Before we wrap up, let's tackle a couple of misconceptions. The first one we already covered. Your take-home pay isn't suddenly going to increase because of this deduction. The savings come later when you file your tax return. Second, some people think that because this deduction is called a deduction on overtime, that they won't pay Social Security or Medicare tax on the overtime pay anymore. That's not true. Those payroll taxes still apply just like before, and state and local taxes may still apply as well. So, what should you do if you think you'll qualify for the deduction? First, make sure you track your overtime hours and keep your pay stubs because you'll want to verify that your W 2 is accurate when you receive it. If you're close to that income phase out range, consider planning ahead. And for some households, this could be a good reason to start adjusting withholdings or even plan the timing of your overtime hours so you get to maximize the benefit. And if you're married and you normally file separately, you might want to consider whether filing jointly makes sense for you now that this deduction exists. To sum it all up, the new overtime deduction is a nice benefit for many employees, but it's not automatic and it's not immediate. It comes with some rules and limitations. You'll see the savings when you file your taxes, but not in your paycheck. So if you keep good records and understand how the deduction works, it can put more money back in your pocket at tax time. So, what's your opinion on the new overtime deduction? Do you see it as a huge help or just a small win? Drop your thoughts in the comments. This is Tasha with West Financial Services, LLC. Like, subscribe, and follow us for more tax strategies and education for individuals and small businesses.